Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Zaldy Co drops his biggest claim yet, saying 56 billion pesos in flood control kickbacks went to President Marcos and former Speaker Martin Romualdez. Monterrazas de Cebu hits back. The developer defends its project as DENR probes flooding and tree-cutting allegations. Manny Villar's fortune plunges, $11.8 billion wiped out as Villar Land crashes after trading resumes. And Smashburger bleeds cash. Tony Caktiong's U.S. burger chain posts a 787 million peso loss as store closures mount. In the third part of his pre-taped tell-all, former Bico party list Congressman Zaldy Co levels his most serious allegations, yet claiming that kickbacks from Bulacan flood control projects alone reached 56 billion pesos, further shaking public confidence in governance. Co says that the entire sum went to President Ferdinand Marcos Jr. and former Speaker Martin Romualdez.
Una pa lang ito sa magusto kong ibunyag. Marami pa akong dadalhin sa liwanag. Isa na dito ay yung kay Henry Alcantara, ang DPWH boys, ang sinasabi nilang halaga sa ICI ay 21 billion. Hindi po totoo yan. Ang totoong numero ay 56 billion pesos at yung pong halaga na yan ay kay Pangulong Bongbong Marcos at Martin Romualdez na punta lahat.
He insists he kept none of the money, describing himself as a courier following orders. And when combined with another 25 billion pesos in alleged budget insertions, Co claims that the total haul reaches 81 billion pesos. He says he is preparing supporting documents and project lists, adding that he prefers to present everything before the Senate Blue Ribbon Committee rather than the Office of the Ombudsman under Boying Remulla.
Kaya ngayon ay hinahamon ko si Ombudsman Remulla kung seryoso talaga siya sa mga sinasabi niya sa kanyang press release na idadamay niya pati si Martin Romualdez kung magbibigay ako ng ebidensya. Patunayan niya ngayon ang pronouncement niya. Imbestigahan niya ang fraternity Brad at ang kanyang kaibigan na si Speaker Martin Romualdez kung talagang tutupad siya sa tungkulin niya.
As the country grapples with questions of public accountability, another controversy is unfolding in the private sector, this time involving a major Cebu development. The developer of Monterrazas de Cebu is defending itself amid allegations of mass tree cutting and worsening flooding in Cebu City. In a November 14 statement, Mont Property Group says and claims that more than 700 trees were removed are false, adding that only shrubs and secondary undergrowth were cleared under approved permits. Celebrity engineer Slater Young says that the project is designed with sustainability features, including an irrigation system that collects and channels rainwater. The Department of Environment and Natural Resources, however, reports only 11 trees remain on the site and is now investigating possible forestry and environmental violations. The developer says that the site is kilometers away from the hardest hit areas and in a separate watershed. It adds that its flood mitigation systems exceed government standards and it pledges continued coordination with local communities. Ultra-Bilyonaryo Manny Villar is facing a sharp hit to his fortune after a heavy sell-off in his property company, a market rout that is sending ripple effects across the real estate and investment community. Forbes says Villar has lost nearly $11.8 billion after Villar Land shares collapsed when trading resumed. His net worth now stands at $5.4 billion, down from a peak of $17.5 billion earlier this year. This comes after regulators scrutinize a 1.3 trillion pesos land revaluation that had pushed the stock to record levels before a 6-month suspension. Since reopening on November 14th, Villar Land has lost more than half of its value, cutting its market capitalization to about 725.28 billion pesos. The continued slide now puts Villar within range of being overtaken by billionaire Ramon Ang, whose net worth is estimated at $3.5 billion. Investors are watching whether the developer can steady the stock after the massive sell-off and how its next moves could shape market confidence. On another front, Smashburger's troubles are deepening, and they're now weighing heavily on ultra-Bilyonaryo Caktiong's U.S. portfolio. The American Better Burger chain, known for its smashed on the grill patties and fast casual format, is struggling in the United States, reporting a 787 million peso loss before interest, taxes, depreciation, and amortization in the third quarter of 2025. The brand has shrunk its footprint from 335 stores to just 200, dragging down Jollibee's North American earnings, which fell 16.5%, even as Smashburger remains the largest brand in its U.S. portfolio. Meanwhile, Jollibee's Caktiong and Red Ribbon continue to see slow and stagnant growth in the region. Frequent leadership changes at Smashburger have hampered expansion, even as Jollibee continues to carry the brand at significant value on its books. Now, the debate over a rate cut is gaining urgency. Finance Secretary Ralph Recto says that there's a high chance of a 25 basis point cut in December. The Bangko Sentral ng Pilipinas, or BSP, has already lowered rates by 175 basis points since August 2024. An October cut dropped the policy rate to 4.75%, a three-year low. Economists point to the economy's sharp slowdown as the driver behind talk of an off-cycle rate cut. But BSP Deputy Governor Francis Abenjoya says that there have been no discussions on any off-cycle monetary action. Now, the country is now in one of its most volatile and uncertain periods in years, with massive corruption allegations colliding with a market that has been under pressure for months. Confidence, more than any economic indicator, is now the real story. And to help us understand how investors are reacting and what this means for the market, we're joined by Philip Hagedorn, President and Chief Investor Engagement Officer at Atram Trust Corporation. Hi, Phil. Thank you for being here with us.
Morning, Maiki.
Okay,
Thank you
Phil.
for having us.
Yeah, good to have you. We're going to unpack and try to understand what's going on amidst the corruption allegations, the high-profile accusations. It's like a tornado ripping through the entire country. What impact are you seeing in terms of sentiment right now?
Well, the sentiment is as low as it can get, I think, from a market point of view. This is back to what I would categorize as the wait-and-see attitude. And I think we got to wait and see.
Yeah, and I want to point out, as it's driven by sentiment, it's the fastest thing to go, and it's also the fastest thing to change. I mean, it can change. It doesn't take much. Well, it could take much, but it can change just like that.
Well,
what's it going to take to turn this tide?
I've seen it before, no? And like you said, I mean, I think, first of all, if the fundamentals were not strong, then it would be a much more difficult story, right? Yeah. But we're coming from a period of growth still, even with the issues. We're at 4% GDP growth and hoping we can get back up to the 5% growth as we move into next year. So sentiment is something that's has to be real. It has to be measurable, right? And I think what will be is moving along and doing what we did in the past with these type of situations. Enforce the law and let the chips fall where they may.
Yeah, you've seen 7 presidential cycles, and as you've said, we've just got to let the chips fall and work things out from there. But one thing that is that we need to point out is that fundamentally we're seeing growth. Although the GDP print in the fourth quarter was down to 4%. In terms of earnings, we're seeing at least single-digit growth. The growth is there. So fundamentally, we're okay. Well, what are your thoughts, Phil?
We're a hardworking country. We have everybody works. We have a very low unemployment number today. People have jobs. We have an inflation low. The issue is, I think, many corporates are not looking at growing and investing. Part of it is high interest rates, and part of it is this uncertainty about government and where we're going to go. Of course, the corporates will want to follow government and spending. And right now it looks like we're going to have to pull back on that government spending until we can clean the mess that we're in. So that means maybe a couple of quarters of slower government spending. But the sooner we get that back on track, the better. And I think the corporates will follow.
How much of what we're seeing today is because of government governance concerns, and how much versus macro fundamentals?
Well, this is a cycle. Like I said, 7 presidents that I've gone through, and I've kind of seen, every type of challenge, from coups to an Asian financial currency crisis to a lack of infrastructure budget, and then suddenly we had that. And so this is a process, right? And
Yeah.
I'd rather that we clean the process sooner than later. In other words, if we're going to be starting to spend 7, 8, 9% of our budget on infrastructure, let's make sure it goes there. And that's what this is about.
Okay. In terms of foreign investors, right now, foreign investors make up only 18% of the market.
Yeah, very
what does
low.
that tell you, Phil?
They're not here. They're just not here. Which is, again, two sides of the coin. One is they've been exiting, and that's what's gotten it to these levels. But I've seen them always come back. And so I think, first of all, a foreign investor will not be the first bull in the market. It has to be driven by locals.
Yeah.
Locals have to do it, whether you're the corporates buying back shares, whether you're GFIs that are starting to invest in the market again. The locals have to be the first. And
Yeah.
once the locals get going, the foreigners will always come
we've
back.
got to get our skin in the game first. At this point, Phil, do you think that the Philippine Stock Exchange has done all that it can at this point to steady sentiment?
Well, I think their sentiment they can do a lot to improve sentiment. And, things about like making the exchange more liquid, not reducing the public float, but increasing the public float. These are things that I think will help the market in liquidity in the long term. Huh?
Okay. Okay. Speaking of that, Maynilad IPO, that was oversubscribed in the middle of all of this uncertainty. What does that tell you, Phil?
That there's interest, right? In the end of the day, there's interest. And it's not just global investors, but the big local investment landscape. I think that's changed a lot in the last few years. And there is capacity to invest from the local investors. So, let's take full advantage of that.
Okay, we want to ask you, because this is what everyone's talking about. Zaldy Co's allegations, big allegations over the weekend to the highest sectors. 56 billion pesos in kickbacks, he says, went to President Bongbong Marcos. What are your thoughts on this, and as it relates to?
I'm not a lawyer. This is, what I say is let's just go through the process, right? Let's make sure everyone gets heard. It's a chance to say their piece, and in the end, enforce the law. Full stop. We've done that before. It should be a lesson to all lawmakers in this country that we put every type of administrator in jail before, from the highest office to the lowest offices in land. So we've done that before. Let's focus on the facts and move forward from there.
At this junction, what would be the best scenario for business?
Well, it's sorting out. First, the Philippines is in a growth phase. We have a working population that's the median age is 25 years old. This is going to be our time, honestly. This is our time to grow. We should be growing much faster than 4 or 5%. And that's a combination of both our strong consumption and investments that need to start, badly needed in the country, which, by the way, we have interest, we have budget, we have partners around the world that are willing to invest with us. So to me, there's a huge opportunity, but if we don't fix the process, then it'll always slide back. So let's take this a positive step as to fixing this process so we can move forward.
Yeah, part of fixing that process, the Bangko Sentral, people say that a 25 basis point cut is on the table in December.
Yeah.
Do you think we need more at this point?
Yeah, I think we could do more. I think, first of all, I have to say the BSP is a prime example of a government institution that is top-notch, that is world-class, and there's a reason they are that way, and I think people should study that for the other government institutions. But they're steady on the hand, they're steady with the ship the way we're going. And this December 11 meeting, there's an opportunity to cut rates in a bigger way, because I feel it could help spur the growth of the economy. I'm not suggesting it's going to help the stock market rally, but the first step is getting FDI back in the country and getting the corporates to start building and investing again.
How much of a rate cut? I mean, it's 25 bips
Well,
on the table.
We can do 50 maybe.
You think we can do 50? Okay.
I mean, that might be pushing it, but I think the currency will be the issue, right? If we do 50, the peso might weaken a little more. We're there at the 59.60 level, a bit uncomfortable, but not too bad. And
But at 50, what message would that send? Would that message, help us, or would that just signal deeper weakness, deeper issues?
well, we have deep issues, so we need help, and I think lower interest rates will help. So again, there's always a counterpart to what you do, right?
Yeah.
And the counterbalance is the peso. We have reserves at all-time highs. We do the cut in the middle of December when flows are maybe strongest from our OFWs. That might help a little bit. And the consuelo there is that a weak peso is actually very good for our OFW remittances, right?
That's right. A lot
So
of our consumption driven. More money in their pockets.
Will be there. So with low inflation, it kind of, it's for the governor
We
and
have
the
that
team to
ammunition
decide,
with the low
but
inflation.
they have that lever.
Okay, Phil, with the PSE index, we touched 5,500 last Friday. We're at a 5-year low. Analysts say that political uncertainty is weighing more on the market than anything else.
Yeah,
is this, would you say this is a technical correction or a full-blown crisis of confidence?
Well, corrections normally is because you have high valuation, right? Our correction has come when we were trading at 10 times or 11 times, down to 9 or wherever we are now. So this is a confidence issue that I think, again, we've seen how we've dealt with those in the past and solved them. So let's just go back to that.
We're
playbook.
trading at such a big discount because of these the governance issues embedded into equities. Our PE multiples averaged at 15 times. Right now we're below 10.
Yeah.
What are your thoughts on this?
That's the discount. That's what we get for our choices. Remember, these people in charge are our choices.
Okay, how do we make better choices?
Make
On that
better
note,
choices.
Make better choices. In the meantime, how does someone make money in a market
Well, this is
uncertain?
I mean, again, the strength of the BSP is that they've really allowed for Filipinos to invest anywhere in the world, right? And today, Philippines is actually a unique situation where all markets around us have done super well. From the US markets, which are up in the mid-teens, to Europe, which is doing the same, some even stronger. And even around Asia, Japan and Hong Kong are doing very well. And Filipinos have access to these investment products today via even the simplest e-wallets.
Yeah.
They're available. So I think, that's the opportunity Filipinos need to think about is diversification, that you can diversify your portfolio globally and take advantage of these fantastic companies that are out there. But let's not forget our own. And I think having an allocation to the Philippines is important, being engaged. And, if you haven't invested yet, buy low, right?
Yeah.
This is the number one rule.
Yeah, these are numbers that we have not seen in a
If
very
you're a
long
young
time.
25 to 30-year-old and are thinking about investing in the stock market, well, guess what? You're getting a fantastic discount right now.
All right, on that note, thank you very much, Phil Hagedorn.
Mikey, it's a pleasure.
Okay, we're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how Asian markets are doing this Monday morning. Right now, the Nikkei 225 is in the red, lower by 0.7%. Hong Kong's Hang Seng Index down by 0.4%, and Shanghai's Composite down by 0.4% as well. Singapore's Straits Times Index in the red, down by just 0.1%. Here at home, the PSE Index dropped 2.5% last Friday to 55.84. All sectoral indices closed in the red, with mining and oil losing over 5%. Decliners outnumbered advancers 133 to 64, with value turnover at 6.3 billion pesos. Taking a look at the main gauge right now, as of 10:25, PSE Index, we're seeing green across the board. We're seeing a breather after all that selling. The main gauge is up by 1.2% to 56.53, back at the 5600 level there. All shares index up by 0.7% to 32.82. Taking a look at the sub-indices, we're seeing buying across the board, with the financial sector up the most, up by almost 2%, nearly 2%. Total volume is at 133 million shares, valued at 533 million pesos. Market breadth is positive, with 78 advancers, 59 decliners, and 54 stocks unchanged. Taking a look at the currency front, the peso edges higher, opening at 59.05 against the dollar, slightly stronger than its previous close of 59.06. Let's take a look at how global financial markets performed last Friday. Now, Wall Street, taking a look at Wall Street over there, they ended mixed as investors worried that the Federal Reserve may hold off on cutting interest rates in December. Now, the market partly recovered after an early session sell-off that pulled all three major indexes down more than 1%. Expectations of a December rate cut have faded as persistent inflation, partly driven by President Donald Trump's global tariffs, continues to push prices higher. The probability of a 25 basis point cut has slipped to below 50% from 67% last week. This according to the CME Group's FedWatch tool.
We were seeing a Friday relief rally today, moving the indices and with tech leading that charge, but we're not seeing as much participation from the non-profitable tech companies that really dominated through the market highs up until October 29th. So that tells us that there may still be some digestion taking place in terms of the elevated growth expectations embedded in valuations.
The Dow Jones Industrial Average ended lower by 0.7%. The S&P 500 flat with a downward bias, and the Nasdaq higher by 0.1%. Over in Europe, markets closed lower. The UK's FTSE 100 down by 1.1%. Germany's DAX down by 0.7%, and France's CAC 40 lower by 0.8%. In other news, federal agents have arrested at least 81 people in Charlotte, North Carolina this weekend, marking a major escalation in the Trump administration's mass deportation campaign. The arrest comes as activists protested earlier raids in Charlotte's banking hub. Operations lasted about 5 hours. U.S. Border Patrol officials Gregory Bovino said many detained had extensive criminal and immigration records. The crackdown is part of a wider effort targeting immigrants in Democratic-led cities. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.